Any regular Thursday. Let's see how this regular Thursday is. Forexfactory.com. Okay, the economic calendar. Okay, we just came out of Euro News at 11 a.m. By the way, don't make reference to this clock over here. Okay. Okay, so I wanted to show you something here on YouTube, but then now we can just leave that aside. With forexfactory.com, we look into landscape our day. Okay, we've got a Bank of England credit conditions. This is going to be affecting the GBP USD, and later on at 2:30 we have the FOMC member Bostic speaks. Okay, this is the Federal Open Market Committee. It has a mild impact, but trust that it will be affecting the GBP USD towards the end of the session, right? So you're just using some fractional disparity: GBP USD, Euro GBP. Okay, you can also look at Euro USD, Euro CHF, USD CHF, all right, in this London session here. So that's our fractional metric that you can be considering. Unemployment claims 3:30 today. All right, it's Thursday, so we've got unemployment claims, and these unemployment claims are a red release. Basically, this means they are a high impact news release. Okay, so you better watch yourself with those and look to manage your money off of that. Later on, we've got crude oil inventories and Federal Open Market Committee. Bostic guy comes back, he speaks again. This is why it is actually critical for you to contextualize what's happening on the charts today. And today, with the Nasdaq in particular, all right, should I not bring the standard down here? Okay, let me just click off of it then and zoom out. Okay, zoom out. I want to show you something that's too small. Let's place an object imbalance, right? That imbalance there, price is traded back into it on the daily chart. And yesterday we saw this monster move. I sent a voice note about this in the group chat, right? This monster move, which validates to me that this entire area in here is in fact an imbalance, and we should see price falling off of that number. All right, okay, let me do that again. Okay, just click enter. Okay, close. Right, there it is. The open of the day yesterday was exactly on the low of this fair value gap. Right, so let me just zoom in further so you can see properly. This is how I draw my fair value gap. It's from the close of that down close candle and the open of that up close candle. This area in here is imbalanced. The algorithm treats it as an imbalance. Kindly draw your attention into how price hasn't closed above the mean threshold. What is the mean threshold? It's the midway. That's why I left the handles on the box. No candle has closed above this number here. All the candles are averaging downwards and closing beneath that number. They're all closing beneath. All closing beneath. All right? They're all closing beneath. This one went way down here. It came back up. Right? Today, price is trading above the open of the day. This context is what we're looking for. We're looking for sell, and I think it's actually selling off as is. Going down to the R1 charts, it's going to be really easy for you to identify. Okay, let me bring back the standard. It's going to save me a lot of time. It's going to be really easy for you to identify what's going to be happening in the hard rights because of the underlying structure that I've given to you from the previous day, 2 days of price action. So from yesterday, from the open, price just sold off. Then it came back and it closed around this number, around the market maker's fair valuation. Today it came out of a consolidation and it went upwards. This up move is ideally a trap move. It's a false move. And in this case, it so happens to fulfill our study as market maker Steve Morrow's consolidation. This is the initial high of the day, IHOD. This is the initial low of the day, ILOD. Let me do that again. I'm taking the real opens and the closes of the candles instead of the wicks. Yes, on a smaller time frame, I will be taking the wicks. I should have only taken 5 minutes with this. I won't. It's pretty much clear, right? And we're also trading above that short-term high. Okay. So, price is coming out of a consolidation. It pushes up. Okay, this is it. This is it. We're looking for this pattern. Moves back into a consolidation to end the day. This can be on a larger scale, as big as that. Targets, pre-anticipation, this sell side liquidity, this sell side liquidity, and most probably the sell side liquidity resting beneath the low of the day from the previous day. Right, let me move all the lipstick off the chart. What other reason do I have for this? There is none, right? Otherwise, if I have more than 2 hours of consolidation around in here, I will be reconsidering this as a likeliness for price to push up first and then come back down. And with these many news releases happening throughout the day till New York time, this can happen. Price can be put into a consolidation like this again before we get a false move and then a drop, a sharp drop. Otherwise, from me to you, with the minute 15 chart, that was the study. Minute 5. Okay. I'm just going to take those relative equal highs and place the equidistant channel above them. That's the high, that's the low. Consolidation. 1, 2, 3 moves. Okay. Add some lipstick. Though price hasn't quite reached into that, the ask line did. The ask price line did. When the bid was up in here, the ask price line was in here. That's the fair value gap on the minute 5 time frame. My anticipation is that price is doing this sort of shadasm here. Let me see. Why am I aiming for the utmost low? That's because that's where sell side liquidity is resting, beneath the swing low. Buy side is now resting above that swing high. Sell side is resting beneath the swing low. Alright, so the model is tradable downwards because price is trading above the buy side liquidity from this previous high over here. Alright, and should take a clearer anticipation off of the minute 1 chart. Right, same model. This was once buy side liquidity and price took it out, traded back into that minute 1 fair value gap. Although I wouldn't like to call that one the fair value gap, however, so it is. Right in there. And yeah, that's my conclusion. I can still see this moving here. By the way, what kind of shape is this? What kind of letter looks like this? Exactly. Market makers method information. So essentially, this is a variation on a theme when you look at it on the minute one chart, in particular because capture annotate. It's called half a Batman. 1, 2, 3. Moves back into an extended consolidation. Let me take that diagram and put it on the side. Okay. It's called half a Batman. Looks like half a Batman's head rolled over. This would be like a full Batman, right? So this is half a Batman. It's a candlestick pattern where there is a fair value gap right in here. So we can get like 3/4 of a Batman's head. It's a joke. It's a joke. It's a what do you call this word? I'm gonna use the word on the screen. It's a mnemonic, a memory word. That's why we call it half a Batman. So we associate it with something that we know, like Head and Shoulders. Exactly. Just simply looks like shoulders, a head with no neck, and a shoulder. I don't know, man. Let me fix that one up. But you get what I'm trying to say. I'm not an artist. So, yeah. From me to you, I hope you found this really, really educative. Goodbye.